What up? What up? What up? It's your resident online mortgage lender, Robert Lewis, NMLS license number 180100. Today, I'm going to talk to you guys about why your pre approved loans do not close. This is something that is very frustrating. Looking at comments online in various groups, you hear the disgust in people's sentiments, and it's understandable when they say, my loan officer said I was pre approved, only to realize when it got down to it, I was not able to close on my loan. Before we get into the video, I have an ask of you. Take a few seconds and hit the subscribe button as well as the notification button so that you'll be notified when we provide or drop new content to the channel. Let's get into it. So let's paint the picture first and foremost. Most people today will go search online or offline, um, be referred to a lender by a realtor or somebody that they know, and say, "Hey, go to this place and apply." And most application initial applications nowadays are done online or with some type of online application, and it's not really a telephone application anymore. This is a good thing, and it also could be, in a lot of cases, a bad thing when the lending partner that you're dealing with is either a novice and doesn't really understand the intricacies of guidelines based upon the program that you're dealing with, or number two, and this is typically more often the case, more the norm in today's lending world, if you will. They're just too big. You're either dealing with a builder, you're either dealing with a huge company, and they have a lot of order takers. Okay, and there might be, seven different people in the process before it actually gets to a senior underwriter that understands, not underwriter, senior loan officer, loan originator that understands the guidelines and knows how to put a file together initially, or to an underwriter. Okay. And during that process, you may have contracted on a home, put down earnest money, put down option money. You're all excited, only to find out that when it really gets to the decision makers, that you really aren't approved and you never really were. So I'm going to take a few minutes, try to distill it down to keep the video at a decent time. But these are the reasons, in my opinion, that people don't get to close on the loans that the loan officer said, hey, you're pre-approved on. So let's get into it. Here's my little presentation. Again, pre-approved loans, why they don't close. Again, take a few seconds, subscribe to the channel, guys. Hit the notification button as well. So number one, let's do this. There's four types of approvals in this business that we're in. Okay. What most of you all are getting, and you might not know this, but it's an automated approval. Okay. In the business, we might call it a DU or an LP. And that's not a bad thing, because depending on the lender, the type of lender that you have, either it's a traditional bank that you're going to service, they're going to service your loan. Okay. And they actually accept deposits. It's a correspondent lender like myself, where we're closing the loans in our names. We're going to issue or assign the servicing right to whatever investor that we use to close your loan with, but you're dealing with us throughout the process, and then your payments might be made somewhere else, as well as we have the ability to broker, and then you have brokers, okay, where they're two steps removed. And I guess the selling point with a broker, because I used to be one when I first started, is that you have more product offerings from different lenders. Again, most commercial lenders like myself do have those same options that brokers have. So those are the different types of lenders, but all of us are going to use automated underwriting systems. Okay. And the standard, Fannie Mae, call it DUDO, desktop underwriter, desktop originator, or LP, loan prospector. But those systems, for the majority of the loans, your information is going to be put through that software, and you're going to get a response that's called an approved eligible or an accept. Approved eligible, do you accept LP, right? So automated underwriting approvals, DULP. Number two, a pre-approval or a conditional approval. As a result of the information that is put into LP or DU, okay? And let me digress. If you're using USDA, the system is called GUS, okay? And so those are the two prevalent systems. And then FHA has what they call a FHA scorecard. Bottom line, it's all of the guidelines for the different programs, okay? Now, based upon the program that you're dealing with, then you'll get a pre-approval, right? Which should mean the loan officer has vetted your income, assets, right? Your credit, everything less the collateral, the home at that point, okay? Based upon that information and that input into one of those systems, you should be able to get a pre-approval or a conditional approval, which says, hey, this this approval that we're giving this person is conditioned upon the seller contributing X amount of dollars to the deal because the buyer doesn't have the money, whatever those conditions are. Okay. Now, I want to stop at that point because the pre-approval or conditional approval are only as good as the knowledge of your lending partner. Knowledge of what? Of the guidelines and how to put a file together. Okay. Thirdly, after you've received one and two, the first two types of approvals, then you're going to go out and start shopping with your realtor professional, right? Or however you're going to find the home. Contract, win a contract, negotiate, win that contract, go through the option period. Once you know you're moving forward to purchase this home, then you're going to get back with your lender in most cases. And now we're going to submit all that information into underwriting, okay, to get what we call, or I call, a underwritten or a conditional underwritten approval. Now, that approval really is better than the first two. However, it should be as good as the first two. Again, the first two are really contingent upon the knowledge, the experience that your lending professional has of the different programs. Okay. And then lastly, after the conditional approval, where the underwriter should, in essence, be saying, hey, I agree with the loan originator's assessment of the income, assets, okay, credit with this program. I check off on all those things, and all we're conditioning for typically are conditions that deal with the collateral, the home, all right, and state disclosures and disclosures that are synonymous with the loan program that you're dealing with, because FHA has documents, federal, state documents, um, VA, USDA, they all have their different documents depending on the type of loan you're doing, and then state documents depending on what state you're closing in. Okay. So that's how it should roll to get to the final approval, when we're just waiting on the collateral, the appraisal to come in on the home, and the home appraises for what it was that you're looking to purchase the home for. So those are the four types of approvals. Hopefully that makes sense. Now, this is why you don't close on your loan when you were pre-approved initially. Okay. First thing is communication. All right. Now, I put this on the lending professional and you, the borrower. Why? Because too many times when people don't get to that point, it's not always on the lending professional. Sometimes you, as the borrower, don't fully communicate all of the intricacies that are associated with you and your loan. Okay. Income, liabilities, credit issues, changing jobs, adding new debt, a myriad of things that can derail the uh, automated pre-approval or conditional approval, as well as the underwritten conditional approval. Because what you all need to know is throughout the entire process, throughout the entire process, there's a continual vetting, re-verifying of your information until the time of closing. So that communication piece is a big reason why your pre-approval is not sufficient to get you to the closing table, because something was missed. And I'm going to put 90% of that on your your lending partner. Okay. And then 10% on you, because sometimes, you guys try to hide things. Let's just be honest. But in today's world, with the connectivity that we have, you can't hide anything. The information is going to come out more times later, and then you're just going to be dismayed and upset. Communicate often and early. Number two, you didn't provide all documentation. That goes into the communication, right? That's that 10% on your side. Okay. If you have a property here, if your student loans were in default, and you went with a credit restoration person, and they told you to block your second and third bureaus, or your LexisNexis or something of that nature. Guys, look at my eyes. We're going to find out. So submit that information, communicate up front, and provide all documentations. Here's another one: income types. There's a lot of 1099 gig workers now. Okay, there's a lot of traveling nurses and things of that nature. You need to know these things up front, because all of these things play a major role in the second, phase of making sure you could pay for this loan, right? And that's the income portion. All loans make the assumption that after you close with this income that we're verifying, that you're going to make that income to 3 years into the future. So again, documentation is key. Third thing, flexibility. Again, guys, from the pre-approval, even when it's done right, okay? So the automated approval, pre-approval, conditional approval, there's communication throughout. You can't be so rigid and say, well, I provided that and I don't want to answer that. Yes, you do, if you want to borrow the monies. So just remember, it's not an adversarial, it shouldn't be an adversarial relationship between you and your lending professional. And if it is, you probably have the wrong one, right? And then lastly, you must trust. You got to trust your lending partner, okay? Again, you should do business with people that you know, like, and trust. And if you cannot trust who it is that you're doing business with, the first three bullet points are going to be very difficult, and most likely will cause you to, at best, have a horrible experience with one of the biggest transactions and the most happiest transactions that you're going to make, in your life, because now you're getting into that asset class and you're building that generational wealth. So those are the reason, guys, why your pre-approved loan doesn't go to closing, right? And so I'm going to end here again. Uh, you know, make sure you guys are making the proper choice when choosing your lending professional. Number two, be flexible. Okay. There might be other things that come up as a result of new information that's coming to your lender that they didn't know, and they have no ability to know as you get into your actual loan. And once a home is actually secured as far as contract is concerned. All right. Communicate early, often, and supply the documentation early, upfront, everything that you know. And then if you're dealing with the right professional, they'll know what to omit and what they need to dig further on to make sure that you're able to successfully close on your home loan. So guys, there you have it. Hopefully those few points gave some more clarity as to why your pre-approved loan didn't go to the closing table. So if we could be of assistance going forward, don't hesitate to reach out. We lend in all 50 states, and we would love to help you. If not, this is some information that you could use with your lender of choice to make sure that you guys are successful and you realize the dream or the goal of home ownership that you're after. So until the next time, this is what I always say, guys. My time is up. I thank you for yours. Be good to one another. Let grace abound. And until the next time, peace.